to be talking about supply and demand areas. What is up, YouTube? It is your boy Matt Trades, and today we're going to be talking about supply and demand areas. Now, if you don't know what supply and demand is, basically supply and demand is when there's aggressive selling or aggressive buying in the market. And when you see these in the market, you're going to know that, hey, the big players in the market, they're in. And that's when we want to be in the market as well, is when the big players are in because they're trying to make their money, so we're gonna follow whatever moves that they're doing. Because guess what? The big players with the money, they move the market. But anyway, let's get into the video with supply and demand. I'm on the chart GBP JPY and I'm on the 4 hour. And a key thing that you should know is that supply and demand can be found on literally all time frames. If you trade the 5 minute, it can be found on the 5 minute. If you trade the 15 minute, it can be found on the 15 minute. If you trade the 30 hour, 4 hour, daily, weekly, hey, even monthly, if you see supply and demand on there, it can be on there. But the higher the time frame in trading, the more that those areas are going to hold the most weight. The supply and demand is aggressive selling and aggressive buying coming out of an area. If I was in the market and I seen this, well, I know 8,400 is, if you watched any of my other previous videos, hold number, and usually on these hold numbers you can catch reversals off of. So if I know I had this aggressive selling right here, it's coming out right, and then also this broke structure right here, right? So this already on the 4 hour time frame broke structure, right? So when I do supply and demand, sometimes you can see breaks of structures. Major supply zone right here. So we're gonna look this up right here with the box. I like to do, if you're on the higher time frame, I like to do like first candle and then the second candle. When it first got out of this area, this was the candle that started that initial push, right? Boom. So you got it right here. It came, broke structure. This is a break of structure, a little lower than here. And I like breaks of structure because I know, okay, we have a supply zone or demand. It could be supply or demand, but in this instance, this is supply right here. So I'm going to mark this up. This is supply, my supply zone. So we have the aggressive selling. Then we also had a break of structure. If you're familiar with market structure, you know that, okay, it just made another lower low, right? So with supply, we're waiting for it to come back up. And this goes in terms with if you're selling, you want to sell high. And if you're buying, you want to buy low. And for this instance, we want to sell high at the supply. Um, so once it did this and came all the way back up, retraced, now I'm just like, okay, now we're looking to execute a trade. And this is on a 4 hour time frame, mind you. So aggressive selling came back up into our supply zone. Now we're looking to get confirmations to execute this trade. So if I'm on the 4 hour, I might jump to the 1 hour. And for me, I'm like, okay, now when you get into the trade, I like to put my stop loss above the supply. In this instance, the supply box. I would put my stop loss above the supply box. And I like to wait sometimes for the break of candles. So if it got here, I would be entering on this candle to see how this candle broke lower than this candle right here. Because this was the first candle that touched, right? Candle didn't go past here. And this is the second one that printed inside. Another candle didn't go past this one. But then when this candle got done printing, this second candle right here made a lower low right inside that box, basically. And really, if I want to go to the 15, let me mark it up. Guys, this is the gems. Like, supply and demand is like one of the strategies out there to pair with your strategy that you're already doing, but you should be using supply and demand with your strategy. So if I go to the 15 minute, you can see, okay, price right here already started to break down low right there. So I'm gonna put my stop loss above the supply zone And I like to catch 1 to 2s, 1 to 3s. And on here, you would have got a 1 to 3. And this is on JPY. But let's break it down again. We had aggressive. Well, let's go back to the 4 hour so you can see it more clearly. You had aggressive selling, right? You just had a break of structure. Supply and demand with the break of structure. And then coming back to the supply, or in this case, well, this case it's a supply, but if it's demand, it would be the same thing. But let's just say, for instance, this is the example of a supply. We're going to, and when we see that, we know it's go time. When you see a supply and demand, when you see a supply and demand setup with a break of structure, that is super, super, super confirmation. Like, it's like one of those, like, hey, I need to be looking at this. But once it got back, putting my stop loss of the zone that we drew up. Remember, I said you want to do the first and second candles in this instance to mark it up. And then you're going to catch your 1 to 2 or 1 to 3. Some people catch 1 to 1s. Some people catch 1 to 2s, 1 to 3s. But I like to catch 1 to 2 minimum. Let's look at some more examples. Even dive into it. What do you see? I see some aggressive buying out of this whole area. So right here, we have a demand zone. Now, demand is on the bottom. Demand is aggressive buying, right? So we already did a supply example. So we already did the supply example, which was aggressive selling. And now we're doing demand. Demand is aggressive buying. So right here in this area, we had a big push of buyers in the market. And guess what? When we see that, we're like, yeah, something's setting itself up to happen. That's when I want to get in the market. I know that, okay, we went up, retrace. This is where you want to draw your demand right here. This one is actually a tricky demand setup. The demand I see, like there was multiple spikes in this area. So you had a rejection, and then it was kind of just wicking people out at that point, right? And that's where I say it's not just supply and demand alone that you should be using. You could be using supply and demand as with other influences. For instance, watch this. I know that this was still an entry. This is the 1 hour. We have all this aggressive movement, right? All this aggressive. And for me, I always use Fibonacci because it tells me where to put my stop loss at, right? So, and if you guys want my fib set up, just let me know. This wouldn't have stopped me out. So sometimes I don't put it just below the box. I will draw out my Fibonacci. The fib has stop loss levels on there. This 1.1 right here and this 1.2 are my stop loss levels. So if I was getting into here and I decided to take this trade right here and give us the push, okay, let's say I got it somewhere right here. I'm putting it right here and I'm catching a 1 to 2 right there. You see that? That's why I say supply and demand should be used with any strategy. If you're using Fibonacci, if you're using any moving averages, because I guarantee you, if I put my moving average, oh my gosh, y'all are not gonna believe this. I literally was recording and I accidentally pushed the pause button on it. So everything, I dropped so many gems, but I'm gonna do 2 parts of this. I'm gonna finish up this example. Supply and demand, right? We just talked about how it came off this demand area, but it kind of went past the box. It didn't close below, but it was still a valid demand area. And talked about before it paused, about using my fib to know where to place my stop loss at so that this wouldn't have happened. And again, I will make another Fibonacci video so that you can get my Fibonacci settings. But when I also talked about how supply and demand should not just be your only influence when getting into a trade, right? So with my moving average, right, price is still trading below 14 SMA. That's SMAs, right? Smooth moving average. When I get this close of a candle above either this one or this one for sure confirmation, could have did this. Here's the close of it, and it opened right there. I kept my stop loss at this 1 or 2 because remember I said 1.1, 1.2 on the Fibonacci right here. Here's where my stop losses can be, and I still could have thought my 1 to 2. in this trade. Boom. Still could have got a 1 to 2 before it fell. Simple. Anyway, you would wanted to trade it to the next higher high, which is the highest right here. You wouldn't want to go past because we never know if it's going to go past. So you don't just use supply and demand by itself. You use it as another confirmation tool. But yeah, that's how you would want to do it. Is when it crosses the 14 SMA, I could have got in right. If I didn't get in down here, I could have got in right there. Probably avoid all of this from happening like that. But let's say you didn't use it, then obviously the Fibonacci would help you. Because, you know, because I don't really use my moving averages like that often, like I used to, but I could have in that instance. But anyway, I'm sorry that this video cut off. I'm gonna do a part two because I had some gems in that part two. But I'm gonna do a part two to supply and demand area and how there's like other tips and tricks when you are trading supply and demand. But anyway, it's your boy Matt Trades signing out. Peace.